Good afternoon, everyone. Welcome to this year's PIFA Mutual Funds Seminar, Managing Your Finances Through Mutual Funds. My name is Rianzi Violena, Assistant Vice President of First Metro Asset Management, Inc., and I will be your host for today's webinar. Let's face it, managing finances can sometimes feel overwhelming. With so many investment choices out there, it's easy to get lost in the details. That's where mutual funds come in. They offer a simple and effective way to invest your money without needing to be a financial expert. Think of mutual funds as a team of professionals working together to help your money grow, while you focus on what really matters in your life, your career, your business, or even your family. So grab a cup of coffee, settle in, and let's get on this journey to better financial management together. By the end of this webinar, you'll have a clearer understanding of how mutual funds can be a powerful tool in your financial toolkit. Also, we will be giving away gift items from the PIFA members, so stay tuned until the end of the webinar for the announcement. Before we dive into the heart of our presentation, let's take a moment to get to know each together a bit better. Earlier, we conducted a poll to understand your experiences and interests regarding mutual funds. The questions were, all right? So we have three questions. Poll question number one, how confident are you in your ability to create and stick to a budget? So 45% felt somewhat confident and 35% felt very confident. That's good news for us. Second question, what is your top financial goal? Majority, okay, answered retirement for 70%. And the next would be equally split among major purchases and others. And last question, how would you describe your level of knowledge about mutual funds? 44% have a minimal or basic understanding of mutual funds. Next up would be 31% of somewhat knowledgeable. Now, again, for this afternoon, we hope that after this webinar, you'd be able to appreciate mutual funds more. So let's dive in. Let me introduce our first speaker this afternoon. He is a renowned personal finance coach and advocate with nearly 30 years of experience in the financial services industry. As the director of the Registered Financial Planner Institute of Philippines, he is dedicated to promoting financial literacy, especially among overseas Filipino workers. A dynamic speaker and author of best-selling books like No Nonsense Personal Finance, he captivates the audience with his engaging approach to complex financial concepts. Let's all welcome my dear friend, Mr. Randell Tiongson.
Right. My name is Randell Tiongson. So here goes, and sharing you my slides. I hope that you're going to be learning something from me as well. Okay, so when we talk about money, we realize that medyo challenging siya. Hindi siya ganun kadali. Some people have a difficulty of saving. Some people have a difficulty of investing. Siyempre, pag di ka pa mag-save, hindi ka rin makaka-invest. And why is that so? I use a picture. No? Are you seeing your screens? I use a picture to describe the financial situation of a lot of people. Para siyang roller coaster. Minsan okay, minsan hindi. Minsan marami kang savings, minsan wala. Minsan marami kang utang, minsan okay naman, bayad ka sa utang. And sa investments, ganun din. Minsan up ang investments mo, minsan down. If you've been investing the last 2 to 3 years, malamang sa malamang, down ang investments mo. Now, why is this so? Why is it challenging to invest, challenging to save, challenging about money? And the best person that I learned from is a guy named Dave Ramsey. Dave Ramsey is the author, he's an American author and radio show host, and I learned a lot from him. And meron siya sinabi, when it comes to money and finances, it is 80% behavior and 20% head knowledge. Because money is behavioral. It's not mechanical, it's behavioral. And that's the reason why, markets go up and down. Minsan madali mag-save, minsan mahirap. Minsan madali kumita, minsan mahirap. It's because everything's anchored on our behaviors. Again, 80% behavior and 20% head knowledge. And I hope, I'm here to talk to you about the skills and the understanding. Pero more than anything else, it's about our attitude and our behaviors that will dictate our success in finances and many other things in life. Now, let me backtrack a little bit. Now, this is a picture, medyo matanda yung tao, no? The reason I'm saying this is because when it comes to finances, you will realize kung tama o mali ginawa mo, you will realize that later on. Okay? Sabi nga nila, you live your life in hindsight. Now, many Filipinos do not actually prepare properly for their financial life, especially when they're old. That's why we are experiencing what you call the sandwich generation. Okay, sa Philippines, we are experiencing the sandwich generation where I am working, and while I'm working, I'm supporting my parents financially, and I'm raising my children at the same time. Now, sa kanya klaseng sistema, wala ngayon tayo maipon. So that when we get old, we don't have money, we now depend on our children. So our children, whom we used to support, is now supporting us. Anong nangyayari sa atin? Mga nagaan tayo eh. Nagsa-cycle lang tayo, paikot-ikot. That's the sandwich generation. Now, that's not supposed to be how we're going to live our life. It is sad that in the Philippines, only 8% of Filipinos prepare for retirement. 8%. What do you do with the 92%? It's a challenge. But alam mo, preparing for the future is something that we should hold on dearly. It's something that we need to prepare and plan for. We should not be asking money from our children. In fact, the Bible tells us in 2 Corinthians 12:14, for children are not obligated to save up for their parents, but parents for the children. So dapat tayo ang nagbibigay sa mga anak natin, hindi tayo humingi ng pera sa anak natin. Now, mga iba sa inyo, baka naman maya, hindi na ako magbibigay ng pera. Bakit? For children are not obligated. Hindi na ako para sa magulang natin yan. Para sa atin yan. We need to prepare. And let me be one step further pa. It's not enough that we don't ask money from our children. Maganda nga nagpapamana tayo. Okay? The Bible also says that a good man lives in inheritance to his children's children, but the sinner's wealth is laid up for the righteous. Okay? We should not just ask money from our children. Okay? We should also ideally leave something with them. Leave an inheritance. Kasi mga Pilipino hindi nagpapamana, di ba? Pag tinanong mo, ano minana mo sa tatay mo? Diabetes, o di ba? Or worse, utang. Again, we need to start to change. And this is very important because I believe you can either be a curse, okay, or a blessing to your loved ones. I pray that you'll be a blessing to them. It's going to help you. And again, to properly prepare for the future, and let me start with this. So that you can invest for the future, you should know the reason. One of the biggest reasons is you need to prepare for that old age, retirement. Okay? Maybe you'll do many things during retirement, but dapat financially able ka so that you will not be a burden to your children. Right? So again, let me start with that. Now, as we start with investments and investment planning, let me read this from Proverbs 24:27. It says here, do your planning and prepare your fields before building your house. There's some preparation na dapat natin gawin. Okay? But we need to start to prepare also, especially when you talk about investing. Okay, may preparation yan. Okay? It starts with, number one, how to handle money well. Now, in 2013, almost 10 years ago, I wrote this book, The No-Nonsense Personal Finance, wherein I outlined what you're supposed to do so that you can achieve financial freedom or, more importantly, financial peace. Okay? Step one is to improve your cash flow. We should know how to handle money. Apply the learnings. You have to increase your cash flow. You know how to earn, you should know how to spend. Then get out of debt. Okay? That's important. This is I recommend na dapat daanan mo to bago ka mag-invest. Then emergency funds. Dapat may savings ka, may backup ka. 3, 4, 5, 6 months. Kung kaya mo, 1 year, that's better. Insurances are just as important also. Life insurance, health insurance, non-life insurance. Then you're ready to invest. This is the preparation I'm talking about. Before you go into investing, dapat daanan mo si 1, 2, 3, 4 before you start into 5. A lot of people, they jump na kagad sa 5 and that's gonna cause a lot of trouble for them. Now, how do you actually invest for the future? Right? We are investing because we need to prepare for the future. We need to make sure. Darating ang panahon, we will be too old, too tired, or too sick to be able to earn a living. And generally, the money that you've set aside, the assets, the financial assets that you've set aside will take you over, will help you, enjoy life later on. Okay? That's why we need to invest for the future. Because I believe in life, you can be money at work or man at work. Ngayon, man at work tayo, eventually, money should be able to be working for you as well. Now, as you go into that, okay, wag basta tumalon. Randell, ready na ako, meron na akong pera, mag-invest na ako. Wait, sabi ko, stop muna tayo, prepare before we start to go. Ano itong mga preparations na gusto kong gawin? Gusto kong ituro sa inyo para gawin natin. Number one, understanding about risk and return. Okay, very important. In investments, you will realize that anything that you put your money into, mayroong risk yan. Whether malaking risk o maliit na risks. Meron yan risk-return relationships. But that's part. Okay, we need to be able to, for us to experience rewards, there are certain risks that we need to understand. Kaya ang sabi nila, high risk, high return, low risk, low return. That's a fundamental understanding on investment. Now, another reason why we should be investing is because there's inflation. Today, inflation is one of our biggest problems in the Philippines and in the world today. Okay, inflation is actually a risk also. Let's say kumita ka, may investments ka, kumita ng 4%. Okay? Pero ano inflation ngayon? Over 6%. So kumita ka ba talaga ng 4%? Baka nalugi ka ng 2%. You see, the real value of money is not based on its absolute amount. Rather, the real value of money is based on what it can buy. So $1 million 10 years ago is not equal to today, and $1 million 10 years from now will not be equal to today also. Inflation na babawasan, nagmamahal ang bilihin, your purchasing power goes down. And that is one of the biggest reasons why you should be investing. And ideally, if you invest right, Okay? Mauunahan mo si inflation. Now, it doesn't happen year in, year out. Sometimes, inflation like now, it's very, very hard to actually earn ahead of inflation because of the high inflation and low investments. But if you look at a 5, 10, 15, 20 year, you can actually overtake inflation if you do it right, if you diversify your portfolio right, which what I'm going to be able to teach you in this session. Now, saan ka pwede maglagay ng pera? Okay, let me talk to you about these things. Generally, this is where you can put your money into. Okay, the most common are creditor claims. Ito yung mga tinatawag natin fixed income. Okay, low risk, pero don't expect very, very high returns. Savings account, time deposits, investment management accounts, then meron commercial papers, corporate bonds, and then treasuries, government securities. These are all IOUs. Okay, you can earn 0.5%, 1%, 2%, maybe 4%, 5%, but it's very hard to earn 10, 15, 20% from these things. Pero safe to, generally speaking. IOU to, there's a contractual obligation for them to pay you. Okay? Of course, if you're borrowing from the government, it's actually no risk because the government can just print money and lend you. Okay? So yung sa government, ito yung tinatawag mo na treasury. Now, meron ibang variations yan, mga certain cooperatives, pag-ibig MP2, those are all good, but the safest among all of these things are what you call treasuries. Either short-term treasury bill or long-term treasury notes. Kaya yung kaka-release lang, yung retail treasury bonds, it's a treasury. Galing yan sa balon ng bayan. So, yan yung tinatawag natin low risk or zero risk. Everything else, zero. Government, they borrow, corporations, they also borrow. Like corporate papers and corporate bonds yan. And of course, there are many other variations coming in from this. But generally, the rule is, these are low risk and low return. Now, following that is your direct equity claims or stocks. Nagbabago na to because the nature is a little bit different. Okay, in this nature, stocks are ownership. Okay, that's traded publicly in the stock market. Okay, may private, you can go into business, that's different, that's a different type of investment. But when you go public, okay, these are shares of stocks. And generally, naglalaro na dito yung market forces. And as a general rule, when you talk about stocks, it's higher risk pero higher return. Why? Because of the nature. Because of the nature. The nature is ownership. Let's say I lent money to my friend kay fixed income. Nangako siya sa akin 5%, magbabayad siya. Okay? Guaranteed ako na magbayad siya ng 5% at least. Diba? I can go after him. Sa equity, walang ganong klaseng guarantee. Depende yan sa performance ng company, sa performance ng market, sa performance ng economy. So when the economy, the markets are doing well, mas malaki kita mo. But if they're not doing well, which is what's happening today, malamang sa malamang nalulugi ka. Okay? So again, that's the nature. So again, fixed income are low risk, low return. Equities or ownership or capital kasi yan, no, is higher return, higher risk. So again, everything plays with the relative situation here. Now, meron dito uso ngayon yung mga managed assets or pooled funds, particularly mutual funds, UITFs, or VUL, yung insurance. Okay, the difference here, ito naman, basically, it can be a bond or it can be fixed income or it can be equity pero may nagmamanage ng fund. So parang collective yung approach. So kunyari, lahat tayo rito, Randell, ikaw na mag-invest sa amin. Kunyari, 1,000 kayo rito. O maglagay kami na tigti 10,000 pesos. So ako, I invest the pool. And then of course, I'll charge you a financial fee, investment fee. But lahat ng kita niyan babalik sa inyo. Now, hindi to guaranteed, pero generally, I like these kinds of funds kasi mahirap din mag-manage the funds, mahirap din mag-invest, and there's professional fund managers to do that. So, mutual fund and UITF are almost the same. Yung sumisikat ngayon sa G-Invest, UITF yan. May maraming mga malalaking mutual funds na available there, and pwede ka bumili ng insurance na may kasamang investments, VUL, it's also a form of a insurance with a mutual fund or a UITF. So, yan yung case. Of course, favorite ng marami, real estate. Okay? Again, real estate is a great investment. It's good for capital growth in the long run. Downside is, syempre, hindi siya ganun ka-liquid. Mahirap mag-unload, mahirap magbenta, but generally, it should be part of your portfolio. And of course, marami may gusto nito, we can also get into speculative like Forex, cryptocurrency, yung mga Bitcoin, these are all speculative. Again, super high risk yan, pero maganda ang reward. But, it can be too risky. So, ang suggestion ko sa inyo, tingnan niyo yung risk nyo, baka hindi to bagay sa inyo. So, binabagayan to mga investments properly. Again, I'll discuss more into that in the coming minutes as we do the session. I hope you're learning from me. Okay. Now, okay. So, Randall, dinaanan mo naman pwedeng lagyan. These are just general ideas. Marami pang uri yan, marami pang ibang klase yan. But in the interest of time, that's what I just want to discuss. But 3 things you do before investing. There are 3 things that you need to establish or to set up. Number 1, you should know your goals or your objectives. Para saan ba yung investments mo? Bakit ka ba nag-i-invest? For instance, retirement. So retirement, long-term to. Magpapakasal ka ba? Magpapamatrikula ba ng anak mo? Okay, you want to be able to make sure that your children will go to college and your child is 2, 3, 4 years old. So may time yan. Or pwedeng short-term lang. Mag-down payment ako ng bahay in 3 years. Okay? Magpapakasal ko in 2 years. So nagbabago yan. So you have to identify. Wag kayo mag-invest without knowing the reasons, because knowing the reasons keeps you invested and helps you siguro identify and stay invested properly. Okay? Your objectives will determine the kinds of investments that you should make. Okay? Yan, very important yan. So your goals. As you know your goals, you will know your time frames. Because ang goals natin, ang needs natin can be short-term, can be mid-term, and can be long-term. Short-term, a year, 2 years. Mid-term, 3 years, 4 years. Long-term, 10 years, 12 years, 15 years. So ano ngayon yung dahilan? Ano ngayon yung ano ngayon yung reason mo for investing? Let's say, papakasal ako in 2 years. Short-term yun. Okay? Or mag-iipon ako pang retirement. I'm 30 years old today. I need 30 years. Long-term yun. Or something, I want to be able to make a down payment to my house in 5 years. Mid-term yun. So minamatch mo yan. There are short-term instruments, mid-term instruments, and long-term instruments. Okay? Yung mga sinabi ko kanina, treasury notes, corporate bills, savings, these are all short-term. So maganda gamitin yan. Hindi mo, ang problema ng maraming tao, they mismatch. They use long-term instruments for short-term needs. Kunyari, sige, magda-down payment ako ng bahay next year, nilagay ko pera ko sa stock market or sa Bitcoin. Pwede kumita, pero malaking risk mo. So ideally, you don't do that. Sabi ko nga, magpapakasal ako, huwag ka mag-invest sa stock market at huwag ka mag-invest sa crypto pang kasal mo. Kasi dalawa lang output niyan. Either bongga kasal mo or delayed ng kasal mo. So baka hindi na mag-iintay yung partner mo dyan. Okay, biro lang. But time frames are very, very important. You know that. And again, in investing, time is a great leverage. So I encourage a lot of people, start preparing for retirement as early as you can. 25, 28, 30 years old, start mo na yan. Because the longer it is, the better it is for you. Actually, sa time kasi meron niyang pwede niyang i-smoothen yung risks. And later on, I'll explain to you how it happens. Okay? But time is a great component in investing. Make sure that you do it as soon as you can and as early as you can. May mga tumatawag sa akin, Randell, please help me with my retirement. Sige, sir. Okay, I'm gonna ask, sir, kailan kayo mag-retire? Randell, I'm retiring in 2 years. Naku, ay sila na panahon yan. So tinanong ko, sir, ano na ba nagawa nyo? Ano na ba naipundar nyo? Ay, nga problema, Randell, wala pa ako naipupundar. Patay tayo dyan. 2 years, wala pa naipupundar. So, Mr. Tiongson, what can you do for me? May sagot ko, I'll pray for you. Ay, di ba? Yun na lang mangyayari. At biro lang. So, time frame. Then, yung risk also. Very important. It's very, very important to know yung risk. Kasi iba-iba klase tao. Merong tao like ako, mataas ang risk tolerance ko. Mataas ang risk preference ko. Kasi I've been doing this, I've been in the financial service industry for over 30 years. So, marunong na ako, sanay na ako. But hindi yan para sa lahat. So, merong low risk, may mid risk, may high risk. Anong ka doon? But more than anything else, let me talk to you about this. Ito madalas hindi ito natuturo ng mga investment people, no? Itong tinatawag kong risk trinity. So number one, we always focus on preference o yung tolerance natin. That's psychological in nature. Okay? Pero minsan you are forced to start investing also. Bakit? Meron kang requirement. For instance, gusto mo magpamatrikul ng anak mo, meron kang 2 years old na anak. In 16 years, magkukuleho yan. Gusto mo safe ka lang kasi low tolerance ka. So saan maglalagay? 4% return. Problema yan. Kasi yung pagtaas ng matrikula sa tuition, medyo mataas. Well, hindi na siya 10% ngayon. Let's say, lagyan natin sa 6%. Sige, problema, your money is only earning at 4, but your need is earning at 6, is growing at 6. So pagdating ng panahon, kulang na inaitabi mo. Baka yung pang 4-year course mo, naging 2 years na lang. Okay? Again, so you are now, there's now a necessity for you. There's a requirement for you to do that. Okay? So you consider that. Now, on the other side, may capacity tayo. Yung pera ba na ini-invest mo, pwede mo talaga iwan yan. Baka naman gagamitin mo yung pera na yan next year or 2 years or 3 years from now. Lalo ka magkipit or inutang mo yan. So, then wala ka pang capacity. Okay? Ideally, money that you invest, money you forget a little bit. I mean, not naman totally forget, but alam mo yan, willing ka mag-intay kasi may fluctuation ng investments. Like ngayon, mababa yan, fluctuated tayo. Kung kailangan mo yung pera ngayon, patay ka dyan. So, where do you make that decision? In risks, you consider your tolerance, you consider your requirement, and you consider your capacity. Where it meets in the middle, that's how you do it. And I hope this is how you're supposed to invest. But this is helpful I hope it's helpful for all of you. Now, of course, we can always make a lot of mistakes with investing. Walang perfect investment. That's why you have to learn how to diversify. Diversify means you put your investment in many, many other places. Sabi nga nila, do not put your eggs in one basket. If you put all your eggs in one basket, what do you get? Scrambled eggs. Okay, biro lang. But you diversify it. Okay? So, hindi pwedeng isang klaseng investment lang ginagawa natin. Kasi ang daming factors, ang daming nangyayari. And some of them will grow faster than the other. Some will be riskier than the others. Now, how do you diversify? Ito, general rule lang. You try to combine assets. High-risk assets with low-risk assets. Example, high-risk assets. Mutual funds, equity funds, stock market, cryptocurrency, Bitcoin. You combine it to low risks like bonds, bond funds, time deposit, Pag-ibig, MP2. Okay, so the combination will actually be optimal for you. High-risk assets will allow your money to grow. Low-risk assets will allow your money to be safe. So hindi mo, pag ginawa mo lahat yan low risks, hindi kikita. Pag sinawa mo high risk yan, pwede ka malugi ng malaki. So again, it's the combination. Now, depende na yan sa risk appetite mo kung which one is more than the others. Like 50-50 for some, 50 risk, high risk, 50 low risk. Some people, 70 low risk, 30% high risk. Some people, baliktad. Now, depende na rin sa age yan and depende rin yan sa understanding mo. Okay? Now, aside from that low risk, high risk, you also combine liquidity. Ano ba yung liquidity? Money that can be made into cash without losses. That's why time deposits, fixed income, generally speaking, okay, savings, these are liquid assets. Like, I love property. Pero ang property, illiquid yan. Baka kung kailangan mo yung pera, hindi mo mabenta. Magmamadali ka, malugi ka. So you want to be able to combine. If you liquid enough, hindi ka nagmamadali sa low liquid assets mo. Okay? So stock market, property, these are all low liquid assets. Okay? But if you have enough liquidity, you wait for your assets to grow before you unload it. Again, combine high-risk assets with low-risk assets, combine high-liquid assets with low-liquid assets. There's wisdom on how to be able to do investing. Now, lagyan natin ng konting numero to. So, kunyari may nag-offer sa'yo 4% return. May 1 million ako, bibigyan ka ng 4% return. Maganda yan. Ko-compound natin yan. After 20 years, the money is now 2,191,123 or 2.2 million. Rough na, ay i-round up na natin. Okay na yan. Dumoble pera mo. Pero ito problema, what if in some years, in that 20 years, inflation went up to 6%, like what's happening today? Baka nga 7% na tayo by the time maparod nyo itong video. Okay? In reality, hindi na-grow yung pera mo. So this is how diversification works. So meron akong 1 million, isi-spread ko into 5 kinds of investments. Iba-iba yan. Let's sensitize it. It's called sensitivity analysis. So yung 200, 200, 200, 200, tig-lima, isang 200 di kumita, nalugi. Masyadong risky siguro. Okay? Isang 200, balik kapital lang. Hindi kumita, pero balik kapital lang. Yung isang 200, kumita lang ng 4. Yung isa kumita ng 8, yung isa kumita ng 12. Pag tinotal mo yan, magkano kinita ng pera mo? Almost 3.5 compared to 2.2. Yes, you took in risk, but because of that risk, you now began to earn better. Pero may wisdom pa din. This is how diversification works, and this is how everyone should be investing. Okay? Of course, it takes time to do that. Siyempre, maliit pa pera mo. Di ba? 5,000, 10,000, 20,000. Hindi mo pa mata-diversify yan. Pero 200, 300, 400, 1 million, pwede mo na siya i-diversify. Okay? So, once you build your investments right, you begin to diversify. Now, bigyan ko lang ng konting simple guide on how to invest or create your investments. So, may plano ka, ano yung goals mo, ano yung objectives mo, then ano yung risk mo, babangga mo yan. Now, ano yung funding mo? Ready na ba pera mo? Diba? Kasi yaman mo ba si Chinky na meron ka ng milyones? So, pag gano'n yung approach mo, iba yun. Diba? Siguro tranches ka, hindi basta-basta mo nilalagay. Or kamukha ako, regular lang ako nag-i-invest. Diba? 2,000, 5,000. Maganda yan, monthly ka maglagay. Or quarterly. O nagko-cost average ka. So basically, depende na yan sa funding mo on how to be able to invest. Or at least option. Ano ngayon, at least yan ang concept na idea mo. Now, ano ngayon yung options mo? Okay, ano yung options mo? Bibili ba ako ng stocks? Bibili ba ako ng crypto? Or papasok ba ako sa mutual fund? Gusto ko may kasama insurance? Franchise ba? Property ba? You study your options. Okay? Spend enough time studying investments before investing. Okay? This is followed by educating yourself. Investments are not rocket science. Pero napag-aaralan yan. Pero kailangan may konting effort. Okay? May konting effort. I wrote a book on investing. You might want to get a copy of that. Okay? But that's important. Okay, you should study it. Watch videos. You can check out my YouTube channel. Meron doon mga about investments. Okay? And then monitor. Chine-check mo yan from time. Hindi naman kailangan i-monitor araw-araw. But siguro periodically, monthly, quarterly, or at least every 6 months. You monitor. And again, walang perfect formula, walang perfect plan. That's why you have to adjust along the way. Okay? And I hope this is going to be helpful for you. Now, kailangan lang iklaro ko sa inyo, no? Okay? Regardless, there will always be volatility or changes in investment regardless of the conditions of the economy. Minsan okay, minsan hindi. Minsan, diba, 2020, investments went down but went up drastically. 2021, 22, bumagsak. Okay? I don't know, but 23, maybe 24, it's gonna be a up market again. There will always be volatility. Okay? That's part of our investment life. Okay? Now, parang hindi nakaka-encourage mag-invest ngayon. Honestly, look, this is the performance of the Philippine stock market or the index, PSEI, in 1 year. Diba? In 1 year, a year ago, almost 6,000, 7,000 tayo. Today, 5,800, 5,700, lugi ka. Okay? Mag-US na lang ako. Okay, ito rin US, oh. Diba? Pumik 10 months ago, 11 months ago, to 36,000. Today, it's 29,000. So, halos ganun din yung bagsak. So, saan ako pupunta? Ay, bale, doon tayo sa DeFi. Decentralized Finance. Bitcoin ako. O, ito Bitcoin natin na 1 year. Okay? Pumik yan at 60,000. Ngayon at 19,000. Malaki pa yung binagsak. Bakit ito? Mas na nga ng konti yan. Okay? So, ano gagawin ko, Randell? Number 1, okay? Don't be in fear. Maraming tao natakot. Ayoko mag-invest. It's catching like a falling knife. Yes, I agree. It's not a great time. But also, you can take advantage of the low prices today. Pwede ba bumaba pa yan? Pwede. Pero hindi yung mababa na sobrang baba na hindi ka na makaka-recover. Again, you have to have time and apply the right strategy to do it. So, Randell, should I time the market? Bibili lang ko pag mababa, beta. Ideally, yes, pero mahirap gawin yan. Mahirap mag-time the market. That's why I'm a big fan of cost averaging because tagal ko na sa industriya. Mahirap mag-time the market. You see, William Sharpe, a Nobel laureate, said, a market timer must be correct 74% of the time to outperform a passive portfolio at a comparable level of risk. So sinasabi, yung timing is harder than it's really hard. Very few people can actually do it. Okay? Kahit experts, they fail. Ito, Nobel laureate na nga eh. Why? Successful market requires two components, being in at the right time and out at the right time. Dapat tama yung pasok, tama yung labas. If you miss either move, you'll underperform a simple buy and hold strategy. So yung mga mas patient, bibili, mag-cost averaging, mag-iintay, they actually outperform yung mga aggressive market timers. I mean, that studies are showing, of course, some people are experts, they can do that, but are you an expert to be able to do that? So with that case, I would rather you do cost averaging and you be patient with investments, right? Now, it helps when you think long-term. Madami nangyayari. Like ngayon, bagsak ang market. But like Randell, paano investments? O lugi. Pero most of my investments are for retirement eh. Well, matanda na ako, malapit na ako mag-senior, pero hindi ko pagkakamaintain yung pera. Okay? But even if mag-senior ako, hindi ko naman lahat kailangan ng pera eh. So that's why yung focus ko is just continue to accumulate and invest properly. So think long-term and focus objectives. When you do that, markets go up and down, hindi ka natatakot, hindi ka kinakabahan, hindi ka nasa-stress, hindi yan toxic. It's important to think like that when you're investing. Right? Investments, especially to all the young people here, 20s, 30s, and even your 40s, take advantage of time because investing time is your greatest ally. Markets go up, markets go down, but generally, they go up over time. So kahit nalugi ka, makaka-recover yan. Sabi nga nila, do you recommend investing to young people? Yes. Why? If they lose their money, they still have parents. O, di ba? May time yan. Kung malugi man, makaka-recover yan. Okay? At may kukuhaan ng pera sa magulang. Biro lang. But investing time is your greatest ally. Right? Now, time will always be benefit. Although sa Bitcoin, medyo bago-bago pa itong investment vehicle na to. No? But you see, you bought your investments in 2017 or 2016. Kahit na umakyat yan ng 60 at bumaba na ng 19 yan, almost 20, up ka pa din. Okay? Of course, pag bumili ka ng 20, medyo down ka. But I believe if you wait long enough, you can recover your losses. Bitcoin yan. But look at the Philippine stock market. Okay? You bought it 20 years ago, you bought it 30 years ago, you bought it 15 years ago, up ka pa rin. Same reason with your stock market, the US stock market. Diba? 10 years, you're still up. Nalugi, yes, pero naka-recover pa rin naman. So again, time is your greatest component here. And you have to make sure that you use time as your great advantage. Now, people always ask me, so Randell, lahat ba yan? Hindi naman lahat ng bagay na investan ko. Pero if you don't mind, I want to share a little bit of how I invest. Okay? Again, this is not investment advice. Sineshare ko lang yung ginagawa ko because I want you to know I practice what I preach. Okay? So number 1, I believe in asset allocation. I believe in diversification. Hindi iisang uri lang investment. Kahit na maganda experience ko sa investment na yan, hindi ako nag-go all in. Yung mentality na all in, delikado yan sa investing. Okay? Delikado yan. So, I learned asset allocation. I spread out, I distribute my assets. And let me tell you, yung kikitain mo sa investments over time is largely dictated by how you allocate assets. It's asset allocation that allows you to make money. It outperforms other strategies. This is the best way to be able to build your investments. So how do I allocate? Of course, I have cash. I use banks. I use digital banks. Sayang, maganda rin yung interest niyan. At least I use that for liquidity. May bond fund ako. I have a bond fund that's been, I don't know, it's been 15, 20 years already old. Kay Randell, you could have transferred your money to make more money. I want some money to be stable. Okay, I have an equity fund. I used to do stocks, but now I just do funds. Wala na akong oras magbantay. Okay? Ano naman yan? May index yan and may mga alpha yan. Okay, mga alpha yan, yung may ibang klase. So I have multiple kinds of funds. I have a VUL kasi I believe in insurance. So I have a VUL. I have properties like during the pandemic, I added property. Okay? Hindi naman ganun karami, but enough to be smiling. Okay? Property. May global funds ako. I like technology, so I'm investing in a technology fund. Okay? I also have a consumer type of a fund, and I have a broad fund. Okay? So basically, I have that also. Global. Kasi dapat may exposure din tayo outside the Philippines. Now, part of my money, hindi naman ganun kalaki, nagki-crypto rin naman ako. Ano naman ng crypto ko? Ito, ADA, Cardano, Ethereum, Bitcoin, VET, Link, BNB, Kate, and meron pa mga barya-barya. Pero maliliit na lang yan. $50, ganyan. Yung may iba malalaki na dun sa iba. Okay? And then of course, I'm also an entrepreneur. I have private equity and business interests. So this is how I do it. And of course, some does better than the other. But generally, I believe, pagtanda ko, siguro naman may saysay naman itong mga pinagagawa ko. Right? And I hope this is something that can help you as well. Now, before I end, I want to share my personal 2-rule wealth strategy. Okay? Number 1, work hard and diligently, spend less than what you make, save and invest the difference. Let me repeat. Work hard and diligently. I love to work. I'm very focused in what I'm doing. I try to spend less than what I make. Try, the operative word. Sometimes hindi. And I save and invest the difference. Rule 2 is refer back to rule 1. That's how I do it. That's how simple my investment formula is. Now, invest, then move on to other more important things. I believe that money not invested is usually money spent. Kaya kesa gastusin mo yan, invest mo na lang. Okay? That's me. Okay? That's me. And I hope that's gonna help you as well. Now, let me repeat this. Let me emphasize that there is no such thing as a best investment. No such thing. That's why you have to diversify. You have to try. You have to experiment. Be prepared to lose money. But just make sure that, you do well also. Now, sana iwan ko lang to. Let's invest early, let's do it wisely, and let's do it regularly. The sooner you do it, the better. And of course, don't stop investing. Naglagay ka na ng 5,000, di na yun. Regularly, 2,000, 3,000, pero gawin mo monthly, gawin mo quarterly. It's gonna turn out to be a good strategy for you. Never invest in something you do not understand. Aralin mo, kundi masascam ka, manuloko ka, magkakamali ka. Okay? Focus on education, focus on learning, and practice due diligence. Ang daming tao naloko, paiwi dito, diba? Investment formula dito, scam daw, kung ano-ano, marami naloloko. So important is you practice due diligence. Research mo yan, aralin mo. Okay? Sabi nga ng uncle ko, si Uncle Warren, risk comes from not knowing what you're doing. So study and learn it first. And then, you try, maybe experiment a little bit. Sabi nga nung mentor ko, Mendoza, gusto mo pag-aralan isang bagay, tayaan mo. Okay? Start mo yan and gawin mo yan. Now, reminder lang, pinakamalaking problem ng maraming tao is nagmamadali. Gusto kagad yumaman, gusto kagad lumaki ng malaking pera. But just a reminder, okay? And again, I'm gonna pick up from the Bible. Proverbs 13:11 says, wealth from get-rich-quick schemes quickly disappears, but wealth from hard work grows over time. Be patient, okay? And eventually, it will pay off. Right? Some reminders again, Ecclesiastes 11:2 says, but divide your investments among many places, for you do not know what risk may lie. Diversification yan. Ang galing, no? This was written 3,000 years ago. Wala pang mga finance book, wala pang investment concept, but this is already something that has been encouraged by the Bible. Now, Randell, gamit ka naman ng Bible verse. Kasi pag Bible verse, I don't question whether it's a truth. I know it's a truth. That's why I share it. Okay? So, wisdom from how to do it. Now, brotherly advice, kuya advice, or now lolo na ako, lolo advice. The future you will either thank or curse the younger you. Ang goal ko na magbago tayong mga Pilipino. Okay? Let's move from being a spender to being a saver and ultimately being an investor/entrepreneur. That the whole theme of MoneyWise is to do this. And this is something that I'm passionate about. This is something that I want to do. This is gusto ko before ako makipagkita kay Lord. Nagawa ko na yung dapat ko gawin na mabago yung buhay ng mga Pilipino. Now, investing, be patient. I believe investing is a marathon, not a 100-meter dash. Hindi ito padalian, patagalan to. Now, sobrang dami nagtatanong ito sa akin. Paano ba talaga yumaman? What is the secret to wealth? And let me tell you, the secret to wealth is not a secret. I picked it up from, again, the Bible. Proverbs 6:6-6:8 says, go to the ant, O sluggard, consider her ways and be wise. Without having any chief officer or ruler, she prepares her bread in summer and gathers her food in harvest. Ang langgam, kopyahin natin yan. Bakit? Ang langgam masipag. Nakakita na ba kayo langgam na tamad? Wala naman, di ba? Pero langgam, bukod sa masipag, masinop. We'll be like them. And life will be better for all of us. But, money is not the end goal. It's only a tool. Okay? Maraming bagay mas importante sa pera. And that's why, you have to be careful about your heart. Okay? Money can be a slave. Okay? Money is a great slave, but a lousy master. Yung tama yata yung quote na yun. But, I always have to remind myself, there are more important things. That's why in Matthew 6:33 says, seek first His kingdom and His righteousness, and all these things will be added to you as well. And when you're faithful, you know Jesus as your Lord and Savior, you follow Him, you're obedient to Him, you don't have to worry. There are no recessions in God's economy. So much so that in times of disaster, they will not wither. In the days of famine, they will still enjoy plenty. That's from Psalm 37:19. Okay? Again, know the reason for money, know the purpose, understand what it's for. Then you can manage it well. I always end my seminars with this. Wealth and the ability to create wealth, it comes from the Lord, and it is not for our own purpose, but for His. Take note, there is a greater purpose for your wealth. Investing is part of it, but there's a greater purpose. Don't forget that. Because ultimately, everything that we have, hindi atin yan, kay Lord yan. Okay? And we have to be able to be accountable for what we're going to do in our lives, especially with our money. Deuteronomy 10:14 says, behold to the Lord your God belong heaven and the heaven of heavens, the earth with all that's in it. And I believe, darating ang panahon, we will be held accountable. Okay, may great audit tayo. And what I want to hear from my Lord is, well done, my good and faithful servant. Yun yung gusto ko marinig, hindi yung wicked servant. Okay? And that has something to do with how you handle money. Now, let me invite, I've written a lot of books. So, I wrote 5 books. Okay? So, 5 na ba? Plus co-written 1. But I wanna also invite you, gusto niyan, you go to my website, you get a copy. And I wanna invite you to my No Nonsense Personal Finance Facebook group. Just join. Maraming sharing po dyan na nangyayari. And again, follow me. Meron po akong Twitter, Facebook, Instagram, YouTube, and TikTok. With that, thank you. God bless all of you.
All right. Thank you, Randall, for that very insightful talk you've given us. Of course, it's always important to plan, do, diversify, and of course, do regular investing and be patient. Now we're excited to keep the momentum going as we move on to our next set of speakers. First, we have First Metro Asset Management Inc.'s first Vice President, Dr. Edwin B. Valeroso. Dr. Valeroso is the first Vice President of FAMI, a company under Metro Bank. He's the head of Special Markets and Training Unit. He has more than 25 years of experience in the areas of finance, investments, retirement planning, and operations in financial institutions. He is currently the president of Capital Market Institute of the Philippines, Inc., and a professorial lecturer at De La Salle University Graduate School of Business, handling varied finance and investment subjects. He finished his bachelor's degree in actuarial mathematics from UST, Master of Science degree in Applied Mathematics from UP Diliman, and Doctor of Business Administration, major in Finance from DLSU Manila. Hello, Sir Edwin. Dr. Valeroso, the floor is yours.
All right. Thank you very much, Mr. Renzi. Thank you. Yeah, I would like to share my screen. Good afternoon to all of you. Let me share my screen. Oh, the host disabled my screen sharing capability. Can I share my screen, Mr. Renzi? Very quick. No, this is live, and I'm only given 10 minutes now. All right. So, share my screen. There you are. All right. So, I'm tackling a very basic investment instrument, but very important. No? This is about this financial instrument, no? Financial animal that we are, and some of us are interested and knowledgeable about. So it's about mutual funds and how they work and how to choose the right one for you as a person, as a family, as a household, or as an institution, a corporation. No? So what is a mutual fund? A pooled investment vehicle, no? An instrument, an investment security, where many investors combine their money to buy a diversified portfolio. So the instruments or the securities are either shares of stock, bonds, or other securities. So in short, a mutual fund is a basket of investment securities or instruments. So a basket of stocks, a basket of bonds, or a basket of a combination of both. And perhaps they are dollar denominated, euro denominated, or short-term, long-term, no? In terms of tenors. No? And they are, this is very important, being managed by professional fund managers who aim to meet specific financial objectives. No? So different mutual funds would have different objectives like preservation of capital, what else? Huh? Growth, no, or fast growth or faster growth or income, like regular income and less risky. So why should we or why invest in mutual funds? No, as mentioned earlier by Mr. Randell Tiongson, this diversification, no, principle is so important. No, so investing in a mutual fund automatically you actually diversify your investment. So by diversifying, you reduces the risk, no? So you don't put all of those eggs in one basket, no? So diversification in mutual funds is investing in different types of mutual funds, no? Funds investing in equities, in fixed income instruments like bonds, no? Or money market instruments, no? Or a combination of all of them. It's very accessible, no? Very affordable even, no? An ordinary Filipino can put in, shell out a small amount of money in lump sum or in chunk, in tranches, no? Like every 15 or of the 30th day of a month, no? And again, I emphasize this one, mutual funds are professionally managed, no? Um, Decades of experience and doing a lot of research, having a very good investment process, highly regulated so that they don't deviate from or being tempted uh, to do investing outside of their mandate, no? So in mutual funds, you can put in your money and you can take it out depending on when you want it. So it's very liquid, no? Uh, Unlike other instruments like time deposit or pre-termination would have a cost in mutual funds, no? Uh, Not so much, but there are mutual funds that don't charge pre-termination or even early withdrawal or redemption. No? So those are some of the reasons why we invest in mutual funds. So how do they work? Very simple. No? So pooling of resources. So investor A, investor B, and so on, they pool their money. They have the same objective. No, and then the fund manager will try, attempt, or do its best to make the pooled money or sum to earn more or to earn the maximum possible return with the minimum possible risk. No, and the earnings at the end of the day on a regular basis are divided among among the investors in a mutual fund. So and that's how it works. No, and at the end of the day, how do you evaluate mutual fund performance? So you compare your investment in a mutual fund or in a group of mutual funds by comparing your mutual funds returns against a particular benchmark or your target return. No? Benchmarks like the Philippine Stock Exchange Index or any bond index if you're investing in a bond fund. No? And look for consistency. Look for consistent performance across different market conditions. Unlike the past few days, no, the market has been quite good. And I mean, even if you're not so good a portfolio manager, surely you will be doing well, no? And in times of, in hard times like the one that we experienced during the pandemic and all of those risks that we have been experiencing and we experienced in the past, the geopolitical risk, economic risk, market risk, and supply chain disruption, and so on and so forth. So there are funds, no portfolios, no mutual funds or portfolios themselves, no that can weather this challenges, no this risk. So you look for mutual funds that earn positively, and they earn enough, they earn high enough, they earn uh, your target return, but make sure that they did not assume a lot of risk or unnecessary amount of risk, no? Because at the end of the day, what is better is you earn particular return, ROI, and you were not exposed to unnecessary amount of risk, no? So the risk return trade-off is also important, no? One such risk-adjusted return measure is the Sharpe ratio. Mutual funds, no? If you look at some mutual fund providers or distributors, they also give the data, the number called Sharpe ratio. So the higher the Sharpe ratio, the better it is. That means higher returns, lower risk, no? And so what are the steps in investing in mutual funds? No? Of course, select. There is a universe of mutual funds available in the Philippines. So different types, different tenors, different denomination, different objectives. No? So you study all of them and determine which one is matching your goal. No? Later on, I'll be talking also a bit about goals. No? And then, of course, choose the fund that fits your goal and objectives and risk preferences, and open an account. Open an account with an asset management company or a mutual fund company like FAMI, no? And then already start making your investment. Lump sum ba yan or in tranches or like a monthly investment program, no? Or for those who are employed, salary deduction could be done, no? And monitor it regularly. Hindi lang iiwanan, no? Hindi lang iiwanan because there are opportunities that you can shift from one mutual fund to another depending on the market and the economic situation, and there are opportunities also, you know. So the presence of different types of mutual funds will give you more room for moving from one fund to another, no? Of course, investing in a mutual fund, you also have an advisor, your financial advisor, no, who could also, you know, guide you and recommend to you, no, what fund to move on to, when to already redeem or transfer to another mutual fund. No? Okay, so there are some common mistakes that people commit, no, or make, but investing in mutual funds, like chasing past performance. No? So, maganda yung historical performance ng mutual fund. Number one siya, top 3 palagi over the years, but it doesn't follow that in the future, no, it will be the same. So don't invest solely based on historical performance, no. And the fees, no, high fees may reduce returns over time, no. But the the proverbial, the higher the risk, the higher the return, no, is always applicable. So when you invest, for example, in an equity fund, no, which is relatively riskier, no? So the fund manager would do its best, no, would do a lot of activities there, no, so fees will be higher, but potential return will also be higher. So it's really just like the law of gravity. You cannot defy the law, that fundamental law of investing. The higher the risk, the higher the return. So you don't ignore fees, no. Over concentration, avoiding putting all your money in one mutual fund, no. Ngayon, ano bang flavor of the month, so to speak, no? Equity fund, no? Is it too late or pwede pa ba? So before fixed income instruments, no? Bond fund, no? So don't just put your money in one type of mutual fund, no? You diversify also. And then basically, mutual funds are better suited for long-term investment goals. So goals like retirement, no, college education of your children, retirement and estate planning. So mutual funds are better suited to those types of goals, no, financial goals. Because the benefits of investing long-term, particularly in mutual funds, the compounding effect, no? So mutual funds reinvest the portfolio's returns, no? Interest of the individual components of the portfolio, the mutual fund portfolio, over and over, no? And it benefits from the compounding effect, no? And the diversification will reduce the volatility and discipline investing, no? Consider also not just putting a lump sum, a bigger sum of money in mutual funds, no? You can achieve your goals by making regular payments to each of the goals, no? If it is possible, no? If not, you prioritize your goals. If there is only so much that you can do to fund those goals? No, not simultaneously perhaps yet, but start working on each of the goals. No, so let's jump into the different types of mutual funds. No, equity funds, a basket of equities. No, the objective is for capital growth. No, so the risk level, high risk among the different types of mutual funds. It has the highest risk. And this is suitable for investors with a long-term horizon and higher risk profile or tolerance. So, this is an example of an equity mutual fund, the First Metro Save and Learn Equity Fund. It's a basket of stocks where, for example, we diversify into different sectors, different industries, and we are actively managing this. We're looking for opportunities, and we always attempt to protect the earnings and the value of the funds. So it is a basket. It is invested in different components of a basket, like here, financial basket. We have this financial assets, SM, ICTSI, BDO, and so on, and so forth. So this is an example of an equity mutual fund. There's also what we call bond mutual funds, which invest primarily in fixed income instruments, long-term bonds, and even short-term, less than 1 year in maturity or tenors, treasury bills, commercial papers. The objective of which is income generation and preservation of capital. And for those who are not risk takers, those who are risk averse or moderately risk averse or moderately aggressive, I think this is a type of mutual fund that's for you. And also we have an example of a fixed income mutual fund. Like in First Metro, we have this, and look at the composition of this. So the size of this fund is already 1.2 billion as of July 31, 2024. So this 1.2 billion are spread out in government bonds, 58%, for example, and then corporate bonds, 33%. The remaining are invested in time deposit. Some are in cash for liquidity. And in terms of duration, this bond fund, a basket of fixed income securities, it has an average duration of 3.18 years. Because talking about risk, the longer the duration, the riskier it is. I think you know that it's not that basic, but fixed income instruments like bonds and other fixed income like bonds like FXT and corporate bonds, treasury bonds are marked to market. That means when interest rates change, the value of these instruments also change. And the longer the duration, and when interest rates go up, the higher will be the fall, and vice versa. So the portfolio managers are very cautious and careful about the duration of the bond portfolio that they are managing. So this is diversified into different fixed income instruments, long-term, short-term. And if you want a combination of both stocks and bonds, we have a mutual fund called Balance Fund. And it is a balance between growth and income as an objective. And this is for those investors who are moderately risk averse. And they strive to achieve both, a little bit of growth, but regular income and conservative. So we have a balance fund in our company called Save and Learn Focused Dynamic Fund. So it's not just the traditional balance fund wherein you would say 50-50, 50% stocks, 15 bonds. This is dynamic. So depending on the market situation, we take advantage of the ups and downs in the stock market or in the bond market. So automatic, you don't do the rebalancing yourself. Our portfolio manager will do it for you. So it's a balanced fund comprising, again, of both equities and fixed income instruments. So this is the actual portfolio as of July 31. All right. And some mutual funds, they outperform a benchmark like this one. This is an example of an outperformance of a mutual fund of its benchmark, which is the Philippine Stock Exchange Index. So there is also what we call money market mutual funds, no? Which are investing in short-term, low-risk securities. So if you want to preserve your money, your capital, and if you want liquidity, then this is the fund for you. Very low risk, and of course, no, lower return, no, relatively, and suitable for investors seeking safety and quick access to cash. No? And even companies who would be managing their, let's say, working capital or the cash flow, then this is also a fund for them. No? And what do you need to consider, no, when you invest in a mutual fund? No, again, I emphasize, look at your objective, long-term, short-term, medium-term objectives, and you look at your risk tolerance. No, what kind of investor are you? Are you risk averse? Are you a risk lover, or somewhere in between? And there are funds that are charging high, management fees. So you also take a look at them and decide. No, especially equity funds. Normally, the management fees are higher. And look at the historical performance. But then again, don't depend too much on the past performance. So the next question is, what type of mutual fund is suitable for every goal? No? Now, different investors, no? Person, a family, a household, a corporation. A corporation would be split into, let's say, a bank, no, an insurance company, a pension fund, no, or non-profit, non-stock organizations like cooperatives, no, or foundations. No? So different goals and different tenors of the goals would have to invest in different or the right kind of mutual fund. So you have to define your goal and the time horizon. For individuals, no, you can classify your goals as falling into short-term goals, wherein really you want to preserve your capital, like your emergency fund, no, short-term need for education and for health, no, normally 1 to 3 years in time period, and there are goals that are medium-term, 3 to 10 years, no, like buying a car, no, a piece of jewelry, going on a trip, no, 3 to 10 years. So here you strive for growth, no, medium term, and for long term you want to maximize, no? Maximize your earnings and the fund that you want to accumulate for your long term goals, no, like retirement, no, like leaving an estate, no, or the college education of a 1-year-old son, no. Who at age 17 will enter college. So it's long term, no? 10 to 20 years. No? For institutions, short-term goals would mean efficient cash flow management, no? And medium to long-term goals of institutions would include generating supplementary income, expanding their entrepreneurial endeavors, no, or their business. So the timetable is 3 to 10 years, no? And long-term goals for institutions would mean, yeah, putting up a pension plan or retirement plan for its employees. No, that's a long-term commitment, and I think liability based on the retirement law. Business expansion or promoting your company from a domestic company to a multinational company, or acquiring another company or merging with another company, entering into big projects, no, capital investing. So that's those are long-term institutional goals, normally ranging from 10 to 20 years in time horizon. So as I said earlier, your goals, different types of goals, different time horizons, there should be, and there are available types of mutual funds to address those. No? For short-term goals, preserving capital, 1 to 3 years, we have an example, save and learn fixed income bond fund or fund. No? And for 3 to 10 years, medium-term goal, the right mutual fund there is a balanced fund, no? Like save and learn focused dynamic fund. And for long-term goals, I think you can afford to invest in an equity fund, like save and learn equity fund, no? For your retirement, for your other long-term goals. Okay, so hopefully with this very short time, no, that I've given, no, you will be able to know, and for many to review what mutual funds are, how they work, and how to choose the right one for you as an individual, as a person, as a family, and as an institution. Thank you. Thank you very much.
Thank you, Dr. Edwin Valeroso, for that very meaty presentation. I'm sure that on top of what Randall has shared, our attendees have learned so much from you as well. Up next, we have Mr. Ramon Luis Osmeña, Territory Manager and OIC for Market Research in Sun Life Asset Management Company, Inc. Mr. Osmeña started his career as a relationship manager for high net worth clients at the foreign bank, spent 10 years as a fixed income bonds broker, and has been with Sun Life Asset Management for 5.5 years, handling territory management in agency sales and market research, and conducts market outlooks for clients and advisors. He has an SEC license in fixed income and a certified investment solicitor for mutual funds, and is a certified trust professional by the Trust Institute Foundation of the Philippines. He graduated BS Marketing from De La Salle University and finished his Executive MBA from Asian Institute of Management. Hello, Sir Mon, the spotlight is on you.
Okay, thank you, Renzi. No, it's my privilege and honor to speak beside such distinguished speakers, no, like Randell and Dr. Valeroso. No, so you guys have heard already what the basics of mutual funds are. My job now is maybe to give you some insights on, navigating the market cycles. No, but before I get to that, in the next slide, you will see 3 very basic objectives of every investor. So in everyone's investment portfolio, there are, for us, 3 basic objectives. Number 1 is safety. No, under safety, this is where you want to keep your money safe and secure. These are usually low risk, short term, low return investments that are either capital secured and may offer liquidity. In the middle, you see the income objective. No, and these are investments to generate a steady source of passive or fixed income via products with potential regular payouts in the form of interest coupons or dividends. And on the right is growth. Under growth, these are investments to grow wealth via capital gain or capital appreciation. These are usually long-term, higher risk, higher return instruments. What are the examples of this? No, on the next slide, you will see them. Under safety, you have yung mga money market funds, no? Time deposits, savings account, T-bills, digital banks with high yield savings. Under income, you have yung mga direct bonds, or preferred shares or common shares with dividend payouts. Or you have yung mga uso po ngayon, yung mga income payout funds, or if you also know REITs, no? Yung mga real estate investment trust. And under growth, you have your typical mutual funds, no? Like equity funds, balance funds for long-term growth, no? You also have ETFs or exchange-traded funds, and also direct stocks. Moving on, when we talk about market cycles, here's the meat of my discussion. What you're seeing on the left are the basic market cycles that you have. No, we were coming off a cash best asset class environment wherein we had this stagflation. That meant there was slow economic growth and typically high inflation, and that meant that interest rates were high, and that's why cash and cash equivalent instruments like time deposits were very, very high in their interest rate payouts. No, that's also why you see banks now, the digital savings banks, which give 4 to 6%. It's also why corporate bonds right now, or yung mga retail treasury bonds, were giving very, very high fixed income interest rate payouts. No, but we're moving out of that market cycle already. We're moving into this reflation environment. And when you say reflation environment, if you look at the table on the right, upper right, reflation refers to growth that is a bit slow, but it's picking up. And then we have lower inflation. And what's the best asset class in that environment? It's bonds or bond funds. Why is that, no? Because when inflation goes down, that allows central banks to lower interest rates. And when central banks lower interest rates, that means bond yields will be going down. And when bond yields go down, there's an inverse relationship to existing bond prices. Bond prices usually go up when bond yields go down, making that a positive effect on bond funds. And that's why we're heavily convicted now, along with a lot of other fund houses, that bond funds could probably be one of the best performing asset classes right now. So on the next screen, you will see the yield curve. So what is the yield curve? The yield curve basically refers to the interest rate of the bonds across the different maturities or tenors, no? So let's say a 91-day treasury bill. Sabi nga ni Randell Tiongson, no? Treasury bills is government issued debt, no? Those are the shortest term government papers, no? The 91-day treasury bill in this chart, it says here, current is 5.95 as of August 16. The 2-year bill is around 6%, no? The 5-year bond is around 6%. 20-year bond is 6.2%. So naturally, the longer you hold the bond or the longer the bond is, dapat po mas mataas ang interest rate po nun. So we just lined up all of those interest rates per bonds per different tenors in this chart. So the red line shows you the current yield curve. The green line shows you the yield curve a month ago. So what does this mean? No, I'm just showing you here that yields on local government bonds have been going down. And what does that mean? That means bond prices of existing bonds have been going up. And that's why your bond funds have been doing well recently, no? So I put here that yields have been going down amid heightened expectations of rate cuts by both the BSP and the US Fed. So, and in fact, last Thursday, the Monetary Board of the Philippines announced that the Bangko Sentral of the Philippines will cut interest rates for the first time in 4 years. And that's what they did. From 6.5%, they cut it by 25 bips, ginawa nila 6.25%. And that sparked a market rally in both the bonds and in the equities also. Next slide, please. So given the first BSP rate cut, no, and further rate cuts down the road, and also given a better inflation outlook, we are more convicted on bond funds to perform well, because the first rate cut is done, and expect more to be cut moving forward. That paves the way for bond yields to go down because inflation has also improved, no? And we're also looking forward to the next big thing in the market, which is the September Fed rate cut. So right now, the market is pricing in a 70% chance of Fed rate cut in September. Bonds usually benefit from rate cuts, no, in the past, because rate cuts means lowering bond yields and bond prices to go up. So bond funds also can immediately benefit as the move lower in yields translates to capital gains. In the next slide, I will show you what are your options, no? So your options with Sun Life Asset Management Company is the Sun Life of Canada Prosperity Bond Fund. So Dr. Valeroso kanina, he explained that there are many kinds of bond funds. There are long-term bond funds. There are short-term bond funds. Ito naman po, it's a short to medium-term bond fund. What does that mean? Most of the maturities or most of the bonds it has is around the 3-year to 5-year to 7-year maturity of bonds, no? The catalysts here are exactly that thing I said earlier. The BSP already began the rate cuts, no? We like bonds now because of that, and also because it also acts as a portfolio stabilizer. When all things go wrong with equity markets, you have bond funds to stabilize your portfolio. Our 2024 forecast is around 4 to 6%. What happened before in the bond fund, though? In the next slide, you will see here the historical performance of the bond fund. I know we're not supposed to chase performance, but I just wanted to point out something here, that the blue bars are the calendar year performance of our bond fund. So example, 2001, the bond fund did 10%. In 2005, the bond fund did 11%. What can you notice here, no? What you're noticing here is that the red line is inflation of the Philippines. Every time inflation goes down, bond funds do really, really well. Because when inflation goes down, this allows central banks to cut interest rates, and this allows bond yields to go down and bond prices to go up, leading the bond prices of the bond funds to do very, very well in capital gains or capital appreciation. So historically, every time interest rates go down and inflation goes down, that is a boon for bond funds, no? So I hope you guys understand that. Going back to what Mr. Randell Tiongson said, our goal really is to find investments that, sort of outpace inflation. And, bond funds sometimes can do that. Look at their past returns, no? Of course, yes, past performance is not indicative of future performance, but just wanted to share with you something that now could be a good time to start moving those money market funds into bond funds because of the potential bond fund rally that we are really convicted in right now. Moving on, the next market cycle is the recovery phase, no? In the recovery phase, you have faster growth, economic growth, and low inflation. And in this case, one of the best performing asset classes is the stocks or equities, no? So in the next slide, what kind of equities do we like right now in this market scenario? Globally, okay, globally, there's something really big happening in the past couple of years, no? In the pandemic, the tech stocks or the FANG stocks, if you call them, were really performing well. And now they're called the Magnificent Seven because now there's this thing called AI. I'm sure everyone knows what AI is already right now, artificial intelligence. And who is leading the forefront of this AI rally? It's NVIDIA. NVIDIA, they're the ones who make the semiconductor chips for all of these AI applications, and all of the other tech stocks have been rallying also with them. Magnificent Seven are NVIDIA, Apple, Tesla, Microsoft, Google, and even Facebook, no? I wanted to point out to you guys that they have the biggest weight in the US stock market, and they have been rallying significantly since the pandemic. This year, again, they are also leading the rallies, no? And I just wanted to point out that in the table on the right, in the Philippines, sadly, we do not have a technology sector nor a healthcare sector. And that's why most of the global equity investors' attention has been brought to the US stock market. And that's why the US stock market has been doing so well compared to our beloved PSEI. So moving on, people think that AI is just in the beginning or the infancy stages of its evolution, no? But right now, it's benefiting not just the tech sector, but all of the other sectors in the global stock market. It's helping in the healthcare sector, finance sector, insurance sector, retail, marketing, transport, even cybersecurity. It's really helping and benefiting a lot of companies, and the earning projections of these companies have been expounding and growing because of the help that we think that AI will give to them. So in the next slide, what are my options? No, if you want to gain access to global equities, if you want access to this Magnificent Seven or the tech stocks or healthcare stocks, we have one of our top selling funds called the World Equity Index Feeder Fund. We launched it in 2020, height of the pandemic. From that time till now, it's up probably 65% total. It's an index tracker. It's a passively managed US denominated fund, but it's offered in Philippine pesos. So no need to give us dollars or exchange your peso to dollars. You give us your pesos and we will invest in the fund for you. World Equity Index Feeder Fund. The target fund it invests in is called the SPDR MSCI ACWI. So it invests in 40 different countries, 60% US. And then it has a lot of other sectors which we don't have locally, like the tech sector, which is 23% of the fund. Healthcare sector is around 11% of the fund. Last year, it did 20%. This year, the forecast is around 7.5% to 18%. Year to date, it's already up 14%. The current AM of the fund is around 3.9 billion pesos already. So moving on, this is some of the performances of our top selling funds. No? The white line year to date, that's the World Equity Index Feeder Fund year to date. All in all, year to date, it's up 14%, despite the recent global market volatility we had just like last week or 2 weeks ago. No, in fact, some people say that this is a really good time to buy the dip in the global markets because people have been waiting for global markets to correct, and it seems like there's a correction already here in the technical chart that you see right here. The red line, it's one of our other funds called the Dollar Voyager. So if you want a dollar version of that World Equity Index Feeder Fund, you have the Dollar World Voyager. The one in blue is the Dollar Advantage. This one naman is a dollar multi-asset fund, which has both equities and global bonds, also doing well. They're all up probably more than 10% year to date, despite the global market volatility. Moving on, this is what I wanted to leave you guys with, no? This is from our partner, BlackRock. investing with emotions can be costly. I know we always say you have to buy low and sell high. But what happens when the market goes up? That's when everybody wants to buy because it's euphoric, right? But when the market goes down, like last week during the market volatility, we got so many calls from advisors and clients saying that, oh my gosh, is it now the time to sell already? Because it might go lower. That's behavior. Mr. Randell Tiongson said it's 80% behavior and 20% market knowledge. But let's take out the emotions of investing. Sometimes during market crashes and market volatility, those are the best times to buy because that is when the prices are low. So please bear that in mind. Moving on. Finally, if you want a fund that can give you monthly income payouts, no? If you for that income and growth objective of your portfolio, we have the newest fund called the World Income Fund. This is a fund, the target fund is BlackRock, a multi-asset fund. No, it has global equities and global bonds. It also gives you capital growth, and at the same time, its mandate is to give you consistent monthly cash payouts directly credited to your bank account. And it's offered in Philippine pesos. So the difference of this one with the World Equity Index Feeder Fund is that this one gives you monthly cash payouts. The minimum for both of these funds, the World Equity Index and the World Income Fund, is 10,000 pesos. Subsequent investment is only 1,000 pesos. If you're wondering, oh, how much am I going to get on a monthly basis? Well, the target annualized dividend yield is around 4 to 5% net. So it's going to be somewhere in that range. So moving on, why should I invest in this fund? Well, first and foremost, this is something if you want a payout of monthly cash income straight to your bank account. Yung mga pang Meralco bills ninyo or pang PLDT bills, di ba? It's also fun if you want to grow your capital at the same time because you invest globally in a wide range of assets like bonds and equities. Plus, you can invest in a BlackRock fund for as low as 10,000 pesos initial and 1,000 subsequent. Moving on. Just to summarize everything, going back to what I said earlier, under safety, income, and growth, if you want safety objective, if you want something just short term, we have our peso starter or dollar starter fund, money market funds. If you want something for income objective, we have our World Income Fund. If you want something for growth, we have our Peso Bond Fund or our World Equity Index Feeder Fund. The Peso Bond Fund is only 1,000 peso minimum. World Income and World Equity Index Feeder Fund is 10,000 peso minimum and 1,000 peso subsequent investment. So I'll leave you guys with this. I'll be here for the Q&A later on. My name is Ramon Osmeña. Thank you, everyone.
Thank you, Sir Mon. To our participants today, if you have any inquiries regarding mutual funds, you may send an email to pifamutualfunds@gmail.com. So we'll now be opening the floor for the Q&A session. Please feel free to send your questions in the chat box, and our speakers will be happy to address them. So I think we have some questions here. So, okay, I think this is for Sir Mon from anonymous attendee at 2:53 p.m. When is the best time to enjoy some of our investments and hard-earned money? For example, I'm in my early 40s, single, and relatively financially secure. I don't think we should set aside most of our hard-earned money for the future. We should also enjoy it in the present time. What are your insights, Sir Juan, for this one?
Okay, Dave. Yeah, good question. I love that question. Also because I'm in my 40s, so we're in the same age also. Answer number one, if you do have various financial goals under your growth objective, as I said earlier, if you achieve some of those goals, would be a good time to reap the benefits of your investments. Number two, let's say you have a global equity fund and it's already up, let's say 40% or 30%, because we've seen that. Trust me, we've seen that. Sometimes it's a good idea to take some profits out already because you don't want to be too greedy naman, di ba? And you can enjoy that. Okay, number three answer. One of my favorite investments is fixed income. Personally, I have a lot of laddered corporate bonds and preferred shares that give me a regular stream of fixed income in terms of coupon payments and dividends from preferred shares. And I enjoy that on a regular basis. So I hope that answers your question.
Right. Thank you for that, Sir Juan. And I think we have another question here and I think this would be the last question, no? Because we do have a limited time though. So I think this is for Dr. Valeroso. And from anonymous attendant 323, can you give examples of what events are drivers in affecting the market that we should be we should be start observing, like for example, elections of certain political figures, mergers, and etc. And how and where can we be informed of this, and what reports should we be looking at, Sir Edwin?
Yeah, indeed.
Yeah.
That's very important and relevant, timely question. No? Yeah, there are a lot of significant possible, headwinds that our market or markets will face. No, like it mentioned about the geopolitical risk. No, the wars ongoing and some more wars coming, or I mean, almost with certainty or a big probability of happening. Of course, disruption of the supply chain and then the price of oil and so on. It's going to be a domino effect, no? Oil, supply chains, or high prices, high interest rates, no? Lower stock market, borrowing costs will be high, companies will not expand. So the stock market will be affected. And elections, of course, in the US, hopefully the Fed won't be affected by politics, no, whoever wins, no. For sure, Mr. Biden would like the policy rates to be tamed, no, not increase substantially, and for Mr. Trump, it's the opposite. And of course, domestically, we also have some challenges like inflation, no, our staple rice, rice, which is a big chunk of the CPI of the Philippines, no? And still, the prices are still not stable, and we really have the government has to do a lot of significant efforts to really bring down the price of rice, which will significantly lower the rates, and that will be favorable for both the bond and the stock markets, for sure. So those are possible, challenges and headwinds, no? And if we are able to overcome that, then the opposite, the other side of it will be our propeller, so to speak, no? For higher, even 7,200 or even higher, as some analysts would predict.
All right. Thank you, Sir Edwin, for that one. And I guess that's all the time that we have for today. But as mentioned earlier, we will be giving away some gift items to those who participated in today's webinar, and also those who will be answering the post-event survey, which will be flashing after this. We would also like to take this opportunity as well to thank our sponsors for the raffle: First Metro Asset Management Inc. and Sun Life Asset Management Inc. And the winners. The three winners for our 7-Eleven gift e-gift certificate worth 500 each from First Metro Asset are Charmaine Abcona, JP Chong, and Christina Ploma. Congratulations. We will be contacting you, so your contact details that you have shared with us in your registration. And for the 5 winners of e-gift certificate or prosperity card worth 1,000 pesos each from Sun Life Asset Management would be Gemma Grace E., Marla Ibarra, Marites Malubag, Andrea Belardo, and Miss Annie T. So congratulations once again for our 8 winners. We will be reaching out to you through the details you provided us during the registration. And of course, we will be posting the complete list of winners in PIFA's official Facebook page. That's worldwideweb.facebook.com/PIFA. That's PIFA Mutual Funds. So stay tuned. You might be one of the lucky winners. Please visit the official website of PIFA at worldwideweb.pifa.com.ph, as you can see in your screens, for a complete list of member funds and fund performances. Also, please do follow, like, and share the official Facebook page of PIFA. We also have our Instagram account if you haven't already, so you're updated of any future events and announcements. And just search for these as you see on your screen. With that, we end today's event. This webinar has been brought to you by the Philippine Investment Funds Association. Thank you again all for watching. We hope to see you again at the next PIFA event. This is Renzi Birena. Enjoy the rest of the day and stay safe, everyone.